How's it going, everyone? I want to welcome you to a trade breakdown video where I'm going to break down 3 market maker sell model trades that I took on NASDAQ this week, and I'm going to showcase to you how I utilized SMT in order to identify these smart money reversals in advance. And so what I'm going to do is I'm going to play each execution video in advance, and then I'll break down the trades. And so without further ado, let's get into the first execution.
Look into its eyes. It sees what we can't.
Listen, babe.
Listen, babe.
Listen, babe. Listen, babe.
Listen, babe.
Listen, babe. Yeah, yeah. Listen, babe.
Listen, babe.
Listen, babe. Yeah, yeah. Listen,
Listen, babe.
listen, babe. Yeah, yeah. Listen, babe.
Listen, babe.
Listen, babe. Yeah, yeah.
Look into its
So now that we've watched the first execution video, what I'm going to do is I'm going to play a clip from the outlook that I did explaining why exactly I was looking for lower prices. What we can see is price retrace into it once, twice. I took 2 trades here on this retracement here. This was on Tuesday. I took a break even on ES, and then the retracement into here on Wednesday. This is a nice win. If you look at the execution video on Wednesday, you'll see that I traded this market maker buy model. What we can then see is price has just been consolidating. We then displace below the breaker, back above it, back below it. This is called high resistance liquidity run, where we're going back and forth between PD arrays from buy program to sell program, buy program to sell program. And now, once price displaced lower again, this confirms high formation and then potentially sell side as the draw. I then took a short on Friday, trading a market maker sell model. And what we can now see is price has reached that bullish order block. And so my game plan going into this week is very simple. Scenario 1 is to look for a low formation inside this bullish order block. What will confirm that? Displacement above these consecutive imbalances that have displaced lower. If price displaced above these imbalances, utilize them as support. This will confirm a low formation and then buy sides as the draw. Scenario 2 is that price displaces below that bullish order block on the daily time frame, forming a bearish breaker. Utilize it as resistance, and then look for market maker sell models into this sell liquidity pool here, because then this would be confirmed to be a market maker sell model. And so as of right now, in other words, I'm neutral as long as price remains below these imbalances and above this bullish order block, I'm neutral. And so my game plan is to be patient and wait for one of these scenarios to align. Because remember, you only need 1 trade per week to do extremely well. And so I prefer to be patient and wait for order flow and the drawn liquidity to be clear, because then I know once order flow is confirmed and the drawn liquidity is confirmed, And we're in a high probability day and session based on the economic calendar. I can anticipate low resistance liquidity runs, and all you need each week is that one low resistance liquidity run. That's all you need. You don't need two, you don't need three, you need one. Once you've mastered taking one high probability trade per week, you can then move to two and then to three. But it all starts with that one trade. Get very good at identifying low resistance liquidity runs based on the economic calendar and wait for draws on liquidity to be confirmed. Once confirmed, you wait for price to reach a point of interest, you drop to the lower time frame, look for SMT, look for CSD, wait for time to align with price, and you execute the trades without any hesitation. And so that is my game plan going into the end of this month. And so what I said in the outlook was, as long as price would remain below these consecutive bearish fair value gaps, order flow is bearish, and therefore we can anticipate lower prices. But in order for me to anticipate lower prices, what I need is a draw on liquidity. And what I saw is that price had taken out the previous week high from Monday to Friday. This here was the previous week low. And what I could see is that we displaced below the midpoints or equilibrium of the range. As you can see, we've got these bearish mitigation blocks here. And because we displaced below internal range liquidity after taking out external range liquidity, I can anticipate price reverting to external range liquidity, which is the opposing side of the range being the previous week low. And so in other words, what I was anticipating was retracement higher, expansion lower. Now, if we play price out, what we see is that price retraced higher and then expanded lower. Now, in order for me to take this trade, I went down to the lower time frame. I saw this SMT at the highs relative to these previous 90-minute cycles. This is automated SMT detection that I'm utilizing at smtdetector.com. I saw the SMT at the highs. My time of interest begins at 9:45. And so once price retraced back into those imbalances, forms a high, I then went down to the lower time frame, such as the 15 seconds, looked for SMT, looked for CSD, and then took the shorts into this level here, this sell side liquidity pool, which was the original consolidation for this market maker sell model. And so I fully got out here at the previous week low. Price did continue to run many more points, but I was content with enough. If we then go back to the higher time frame, I then said in the group, in the Telegram, as long as price remains below these bullish order blocks, which are bearish mitigation blocks, drawn liquidity is the previous week low. What we can see is price retraced higher. What we want to see now, what we then see is SMT relative to the AM session high. If I just open up YM, you're going to see that SMT relative to that 9 o'clock candle. We can see YM took it out, whereas Nasdaq failed to do so. This is SMT, and SMT signals the end of retracements and consolidations, and so price retraced higher into this price range, formed a high, and then expanded lower into the drawn liquidity being the previous week low. If we now take a look at the second execution,
Look into its eyes. It sees what we can't.
Listen, babe. Listen, babe. Listen, babe. Listen, babe. Listen, babe. Listen, babe. Yeah, yeah. Listen, babe. Listen, babe. Listen, babe. Yeah, yeah. Listen, listen, babe. Listen, babe. Yeah, yeah. Listen, babe. Listen, babe. Listen, babe. Yeah, yeah.
And again, I'm going to play a clip from a daily outlook that I did on Tuesday, explaining why exactly I was looking for shorts. And what we can see is that price retraced, formed a high, and then expanded lower into this sell-side liquidity pool here. I took this market maker sell model here. I traded this. I will release a trade breakdown for this trade because I believe there was a lot of value for you to study in this trade. What I then said in the Telegram, as long as price remains below the annotated bearish mitigation blocks, order flows bearish, drawn liquidity is next sell-side liquidity, being the previous week low. This was the previous week low, which is this blue line here, and this was the bearish mitigation blocks, which is this price range here. And what we can see during the PM session is price retraced higher into this price range here, formed a high, and then expanded lower into that previous week low. Now going forward, as long as price remains below this mitigation block here, these bearish mitigation blocks, order flows bearish and draws on liquidity are lower. If however price would displace above this price range, the final line of defense for lower prices would be this bearish breaker on the daily time frame. And if price would displace above that, this would confirm a low formation, and then buy side would be the draw. I'm also seeing this bullish order block here, which is utilized as support multiple times. If displaced below, must be utilized as resistance, meaning my invalidation for the sell program would evolve to this price range here. Meaning expansion lower, retracement higher, utilize it as resistance, and then expand lower into this sell side objective here. And so what I said in the outlook was if price would displace below this bullish order block, which became a bearish mitigation block, notice how many times it's been utilized as support. Once displaced below, must be utilized as resistance. And what we can see is that price expands below it, retraces into it. I was then monitoring for high formation. We then had SMT relative to the previous day's PM session high. This is the SMT here, where price failed to take out this high on NASDAQ. But if we take a look at YM, we can see that YM clearly took out that high, meaning we have SMT. Remember, this SMT is automated. And because SMT signals the end of retracements and consolidations, as well as the beginning of reversals, this SMT was the signal that, okay, this price range now is going to be utilized as resistance. And so if we go down to the lower time frame, such as the 1 minute, just going to draw in the original consolidation. We have SMT relative to Asia's high as well, just to show you Asia's high. YM took out Asia's high, whereas NASDAQ failed to do so. This is that red line here. And we've got bearish SMT detected with YM session high. And so at 9:45, which is the beginning of my time of interest, put a line here. What I saw is that we had this bullish order block here, which was being utilized as support pre 9:45. And so once it's placed below, I waited for retracement, entered short with my stop above a swing high. And then first target was this sell side liquidity pool here. And then my second target was this sell side. And so again, this was the trade, very clean. SMT is what signals the reversal. So if we now move on to the final execution video.
Look into its eyes. It sees what we can't.
Listen, babe. Listen, babe. Listen, babe. Listen, babe. Listen, babe. Listen, babe.
What we can see is I took a short on Thursday, and the reason for that is because price had taken out the January high, which was here, produced CSD, and so I was anticipating price reverting to January low, which is this price level here. And so as long as order flow continued being bearish, what I was going to do is I was going to continue looking for shorts. What we can see is price forms a high inside that mitigation block again. SMT signals the expansion lower. You just continue. SMT again signals the expansion lower. What I then saw is price took out this sell side liquidity pool here. Remember, our drawn liquidity is this price range here. What I also saw is we had this bearish mitigation block here, which is also a bearish breaker. Why? Well, because if we look at YM, you'll see that YM took out this high, and so we can treat this bearish mitigation block as a bearish breaker because we have a high, low, lower high, lower low. However, because it forms a higher high on a correlated market, we can treat this as a bearish breaker. From the execution video, what you can see is what I was anticipating was retracement higher, expansion lower into the January low. We had this large expansion lower during the AM session. Again, the SMT signals the reversal. Price retraces into the mitigation block, forms a high, and then expands lower into the January low. Now, if we go down to the lower time frame and zoom into this portion of price action here, I've actually gone into replay. Remember, this is the January low, because I'm going to show you the SMT detector in real time. And so price begins to form SMT. But remember, SMT only becomes significant after we have a change in the state of delivery. And so we have these bullish order blocks here, which if displaced below, become a bearish breaker. SMT is detected, so waiting now for a change in the state of delivery. CSD is then confirmed because we've now closed below this breaker. And if you play price out, what we can see is order flow continues bearish. I entered short around here, and then price continues lower. Again, another form of SMT here, time cycle SMT, which signaled the expansion lower and the end of the consolidation. So final expansion leg lower now into the January low. Price retraces, SMT is detected, time cycle SMT, based on the previous 10-minute cycle. What does this signal? Well, it signals the beginning of a final expansion leg lower. What we see is price then reaches the January low, which is our drawn liquidity. And so if I just go back to the higher time frame, what I want you to see is that in every single trade here, I'm just going to go back in time, in replay. So what I'm now going to do is I'm going to play out this entire market maker sell model where price took out the January high all the way until price took out the January low. And what I want to show you is that every expansion lower will begin with SMT. So first of all, we have this big SMT at the highs here relative to YM. And if we just play price out, we've also got this small SMT here at the smart money reversal. I'm actually just going to play this out on 1x speed. We're seeing SMT here at the highs. Price then begins an expansion leg lower. Remember, this was the change in the state of delivery. These bullish order blocks, if displaced below, confirms a sell program. And remember, I already know in advance which arrays on the left side of the curve should act as resistance. So I know if price displaces below this array, it must be utilized as resistance. If price displaces below these bullish order blocks, which will be utilized as supports, must be utilized as resistance. These bullish order blocks, utilized as supports, must be utilized as resistance. This bullish order block, utilized as supports, must be utilized as resistance, and so on. And so if we continue to play price out, what we can see is we had that SMT at the high, which signaled the expansion lower. Price then closed below these bullish order blocks, which are now bearish mitigation blocks. They must be utilized as resistance. Price closes back above them, signaling a buy program. SMT is detected. We then expand lower again. So we went from sell program to buy program to sell program. This is the definition of a high resistance liquidity run. And we can see the SMT at the highs is what signaled that expansion leg lower. Price then displaces below this array. Again, if retraced into, be utilized as resistance. Just continue. See SMT here between these two candles here, which was 90-minute cycle SMT, signals that expansion leg lower. Same here. We've now displaced below this array. Must be utilized as resistance. We can see the SMT already, and then price expands lower. There was the SMT. Price displaces lower. This array now must be utilized as resistance. There's the SMT, and there's the expansion leg lower. We've then got this bullish order block, which is a bearish mitigation block, must be utilized as resistance. However, what we can see is price goes into a buy program, back into a sell program, back into a buy program, back into a sell program. This is the definition of a high resistance liquidity when environment. So we went from low resistance into high resistance. But again, what signals the end of high resistance? SMT. So SMT signaled the end of this consolidation. And again, we had that SMT to highs, which signaled the end of this retracement higher, followed by expansion lower. We then displaced below these bullish order blocks, or closed below these bullish order blocks, which we utilize as support. Support. Once closed below, must be utilized as resistance. Again, my focus is on this mitigation block here because I was treating it as a bearish breaker because price took out buy sides. And then finally, price produces that expansion leg lower into the drawn liquidity being the January low. And so this is current price. And so the important thing to note here is that every single expansion lower, which formed at a premium array within a low resistance liquidity environment, ended with SMT. Meaning, if we know the drawn liquidity is lower and we know order flow is bearish and price retraces into a point of interest, if we see SMT plus a change in the state of delivery on the lower time frame, what can we anticipate? Expansion lower, expansion lower, expansion lower, expansion lower, expansion lower, expansion lower. All three trades that I took this week had SMT at the smart money reversal, at a point of interest, within bearish institutional order flow. And so what could I anticipate? An expansion leg lower, which is where I traded the right side of the market maker model. And so that brings us to the end of these trade breakdowns. If you want access to this indicator that detects time cycle SMT, link will be in the description. You can go to smtdetector.com. And so I hope you found some value. And with that, I'll see you in the next lecture. Be safe.